Welcome to Markets Now. I'm Michelle Rook with Jim McCormick of agmarket.net. And post the WASDE, we do have feed grains. Well, we're mixed there. Wheat is lower, corn to the plus side, and soybeans are higher as well. All right, Jim, let's break this or unpack this market and this report down, because first of all, let's start off with soybeans. Old crop ending stocks, there was a bit of a surprise, down to 350 million bushels. Soybeans down to 295 million bushels, way below trade estimates. Let's talk about how we got to those numbers.
Oh, just good demand, plain and simple. I think we've seen very good exports down the line here the last couple months, Michelle, and the USDA put that into account. Now, they did say they were going to take the current trade policy as it is into effect. Now, did they take the deal with the Chinese over the weekend? I'm not certain. But, the net effect is this carryout is less than what the trade was thinking for both the, old crop and the new crop. And, you're seeing a positive response to it today at midday. I think also there was definitely some positive momentum that actually came into the report due to essentially the U.S. and the Chinese ratcheting down the trade rhetoric and the tariffs to maybe a little bit more mutual where business can get done.
So did they take that into consideration here in the lockdown? And then are they assuming, apparently they're not assuming, that we're going to get some sort of a phase one type trade deal, right?
I mean, right now, I would argue, if you look at it, like I said, they did raise the exports a little bit for old crop. But if you look at the new crop, the net effect for new crop is they've lowered the anticipated exports for the upcoming year, which makes sense because we're seeing ever expanding production in South America. So with the fact that they've actually got the exports lower for new crop for this upcoming year tells me that they, at this point, do not believe we're going to get a kind of a second phase one deal where China is going to commit to buy a lot of grain. And actually, Michelle, there's an article over the weekend on Reuters news service talking about how the Chinese and the Brazilians were working together discussing how to build railroads to essentially move Brazilian beans to that new Peruvian port the Chinese just built here recently.
Yeah, I saw that and thought, oh, well, that'll be interesting. And it comes as no surprise as they cozy up closer to each other. Let's go back, though, and just talk about what USDA used for assumptions to get to our production and yield, because they used trendline yield and they used the acreage numbers from the prospective plantings, right?
That is what they did. And, for both the corns and the beans, now the question is, can we hit that trend line yield? The beans, I think, maybe a little bit better because your acres are down a little bit. The corn, Michelle, gets a little bit more interesting with these trend line yields because we've yet to hit trend in recent history. And if you look at these corn acres that they came out with in the survey in March, we're getting ground probably a little bit more of the ground it doesn't traditionally is the best ground in the United States. So the odds are very, very low, in my opinion, that we're actually going to hit that trend line yield. And that's what the trade will be gauging as we go through the summer and see what the government does with that yield.
Yeah. All right. How bullish was the report for corn? Old crop ending stocks down to 1.415. New crop under 2 billion bushels, 1.8 billion. Again, how bullish is that?
I think it's really pretty bullish. I mean, the reality is if you look at where we're at, I think the key was keeping that number under 2 billion. Late this past summer, you had corn trading around 365 on the spot price of corn in the September contract. And corn, we were talking right around a little over 2 billion carryout. So that was the fear. If you got to carry out over 2 billion for new crop, would that drag this corn market down without a weather problem? Now you're down to 1.8. You've solved some of that problem. And now the real question is down the line, at least on the supply side, is this trend line yield 181 achievable? And like I said, I think it's going to be very hard to do. It's not, it's just historically, the odds are very limited when we have these big acres that you can hit that national yield. On top of it, we are dealing with some drought issues across the Midwest, especially in the West. And a lot of the weather guys out there are anticipating a warmer, drier bias this summer, which could also cause a yield drag.
But Jim, we also saw USDA raise exports and feed usage to get down to this 1.8 billion bushel new crop ending stocks number. Is demand overstated in your opinion?
Well, if you look at what they do historically, Michelle, when you get big supply, they go out big in demand as well. And you got to remember, we're trying to guess demand, not necessarily this summer. We're trying to guess demand for next summer. So, there's no doubt about it. They're taking a glass half full type of viewpoint of demand. Will that demand be overstated? I would argue more than likely it probably is a little bit overstated. So what will happen, though, more than likely is as this yield starts to shave back, as the reality comes in that we're probably not going to hit that national trend yield, they'll shave back the supply, then they'll turn around and shave back the demand, and that'll keep that balance sheet carry out somewhere right around 1.8 at least through the summer.
Do you think demand, though, may get better as we start getting some of these trade deals signed? Is that a possibility?
Well, there's a hope they will do that. I think in general, if you look at where we're at right now, we cut a trade deal last week with the Britons or the UK, and what did we end up with? A 10% tariff, all British goods coming into the United States. If you look at the deal was coming with China, it was announced over the weekend. I'd say roughly we got a 10% tariff due to economics, and there's about a 20% tariff on goods due to fentanyl. If they can get the fentanyl crisis under control, what does that mean, Michelle? Get your tariff down to a 10%. So essentially, President Trump essentially gave 10% economic tariff to the person who had probably the worst trade surplus with us, and we took a 10% trade tariff, a 10% tariff on a country we actually had a trade surplus with. That tells me that that's the Trump goal right now, is to tariff everybody at 10%. And what's interesting, if you go back to the Republican Ways and Means Committee late last summer released an article suggesting they were looking for a 10% tariff across the board on all goods to generate $1.9 trillion in essentially taxes to offset the President Trump's taxes. So when I look at what's going on right now, we're just actually doing the roadmap that the Trump administration and the Republicans are planning on, a 10% tariff or tax on everything coming into America.
Interesting how you have to do all this math and everything else to get to that end goal, for sure. All right, what about some of the global or South American numbers on corn and soybeans? Anything that you saw there that was much different than we expected?
Well, I think the big thing is you look at the global ending stocks for corn, especially, it was about 20 million metric tons lower than what the trade was guessing. The bean carryout global was a little bit lower. So, I think that was definitely a little bit of a bullish tint to where we're at. But the global stocks, folks, are really, really, really tough to guess out, because you're trying to guess what we're producing this year. I think you're trying to guess what South America is going to produce this upcoming winter. So it really is a wild guess. But, at the phase front, at the current phase of it, you got to say is a little bit friendly to the market.
Okay. Market isn't taken off huge as a result of it, but we'll see. The day isn't over. What about the wheat market here? Obviously, we raised production and raised ending stocks for new crop up to 923 million bushels. That's pretty negative, isn't it?
The reality is right now the wheat, it just can't get out of its own way. The crop's getting bigger. I mean, the best hope we can get for the wheat is the market gets to a low enough price where we're going to stimulate some demand. The weaker dollar hopefully will bring that in. There was reports that China was in there buying some wheat from other countries. Maybe they'll come in and buy some U.S. wheat now this tariff agreement has kind of come into play. The other thing I could see, Michelle, is you could see more wheat feeding coming to fruition if this wheat crop is as big as it looks like it's going to be. But right now, the fact is we have just too much wheat.
Wheat, right. And that could be trouble if we push more feed into the wheat into the feed ration. That could be trouble for corn, couldn't it?
That's what may limit the corn rally this summer. I mean, you look at a situation where all of a sudden this corn market rallies because we're worried about the supply side situation. Like I said, that demand looks like it might have been overstated. And if you get a big wheat crop, they will feed that wheat into into the rations. We heard earlier this year that some areas were already doing that. And I would guess if this wheat market cannot catch very soon, as we get this freshly harvested wheat coming out of the fields, that will make its way into feed rations as well.
So let's talk about kind of price, I guess, projections that you have right now. Is corn fairly priced at this level here for both old and new crop, do you think, with the numbers that we got today?
I think we're pretty much fairly priced at the moment. If you look at where old crop corn's trading at price-wise, new crop, the carryout's not going to grow by much. So I think we're fairly priced because we do have a long summer ahead of us. We're looking to be a little more 50% planted here, I think, by the report tonight. So we're making progress there, and then we'll see. And then, I think the odds are high that we will get at least one weather rally in it. And then, it depends on where that demand, shakes out. If that carryout does start to build up in the corn back up toward 2 billion, then you're going to probably see this market work below $4 into the fall. But a lot of water's got to go under that bridge, Michelle, right now. Like I said, the weather forecasters we listen to are telling us that they are concerned about a warm, dry summer developing. So I think that'll be the major impact of the market over the next couple months.
Yeah, it certainly bears watching. What about soybeans? New crop, 295 million bushel ending stocks figure. It looks to me like we're a little too low at this level.
I think if anything you are, and then you look at where you're at with those acres, Same situation with the corn. If we happen to take a couple bushels off this trend line yield due to a dry summer, I would argue the bean market does look undervalued and you would see a rally. Now, it will be capped a little bit because of the big Brazilian crop. But yes, beans look like they are set up for a rally as well because, we are not giving ourselves much room on the supply side of the equation right now.
And what about the wheat market? We're already at contract lows for Chicago and Kansas City wheat. With this number, how much lower do you think we have to go?
Oh man, Michelle, that's a hard question to ask. I mean, I'm hoping we're near the bottom. I mean, the funds continue to go all in selling this wheat. They're incredibly oversold. Now the question is, you got to get something to kind of shake the market out. Could it be a rally in the corn market that turns and spills over into the wheat market? Could be a surprise purchase by somebody. Right now, the wheat's goal is to find some demand. And, like you mentioned, the price is lower as we speak, as the numbers came out. So we're not there yet.
Yeah. The only follow-up I have due on corn, we saw the spreads unwind last week. July corn got really beat up, was down to new lows for the move. That didn't feel like a 1.4 billion bushel ending stocks number that we were trading.
Well, I tell you what, the spreads are interesting. I mean, you look at where it was at. You got a corn carryout down, like I said, 1.4s. You got a new crop at 1.8. You thought that'd be a little bit positive to it. Right now, you're not seeing much of a move, and maybe that's just telling us the end user has almost all the grain he needs procured because he was nervous about the demand situation. And essentially, that spread just may not bull spread like we traditionally would expect.
All right. Thanks so much. That is Jim McCormick with agmarket.net and Markets Now.